Hello everyone, here are the latest market news on October the 26th, 2020. US and European stocks plummet, CAP reports losses. European stocks markets opened sharply lower on Monday as the rise in coronavirus cases triggered measures that are more restrictive. France has also set records for unwanted cases and Spain has declared a state of emergency. Germany's DAX futures contract traded 1.7%, France's CAC 40 futures fell 1%, and the UK's FTSE 100 futures contract fell 0.8%. The United States has recorded the largest number of new cases of COVID-19 over the past 2 days. This, coupled with the lack of clear progress in the US stimulus package, caught S&P 500 futures by 0.6%, EUROSTOXX 50 futures fell 0.7%, FTSE futures fell 0.4%. In corporate news on Sunday, CAP released third-quarter results showing a 4% decline in adjusted total revenues and a 12% drop in operating income. The German software giant also cut its forecast by a year, saying the coronavirus lockdown will hit demand in 2021. Samsung CEO's death raises hopes for modernization. Shares in Samsung Electronics Co. Ltd. and its subsidiaries rallied on Monday, a day after the death of chairman Lee Hong-hee. Samsung C&T and Samsung Life Insurance rose 13.5% and 4.3%, while Samsung SDS rose 6.7%. Shares in the electronics division, the parent of the Samsung Electronics conglomerate, climbed 0.5%. His son and heir Lee Jae-yun owns 17.3% of Samsung C&T, the de facto management company of the conglomerate, while the late Lee Jong-hee was the main shareholder of Samsung Life with a 20.76% stake. Investors are betting that the need to maintain control of the family conglomerate and pay inheritance taxes valued at about 10 trillion won, $8.9 billion on unlisted stocks will push the company to change, although analysts differ in opinions about the form in which these changes will take place. Hyundai reports losses due to additional costs. South Korean carmaker Hyundai Motor Co. posted a new loss in July-September on Monday, falling significantly short of analyst forecasts due to costs associated with problem engines. The company's shares fell 3%. The company reported a net loss of 336 billion won, $297.72 million, for the third quarter, well below its average profit forecast of 1 trillion won, according to a survey of 12 analysts by Refinitiv. Hyundai Motor Co., a subsidiary of Kia, said last Tuesday that their third-quarter results would reflect quality-related costs totaling 3.36 trillion won, $2.95 billion. The company also posted an operating loss of 314 billion won. Revenue rose 2.3% year-on-year to 27.6 trillion won. Siemens sells his arm Flender to Carlyle. American buyout group Carlyle Group Inc. is approaching an agreement to acquire a Flender mechanical drive arm for Siemens AG for approximately 2 billion euros, $2.37 billion. Siemens and Carlyle are finalizing the terms of the deal, which could be announced this week. Technology company last week asked Triton, Carlyle, CVC, and Brookfield to submit final proposals next week for the business, which has a profit before interest, taxes, depreciation, and amortization of just over 200 million euros and could be valued 8 through 9 times more. Flender supplies Winergy-branded gearboxes and generators for wind turbines, gears, and couplings for cranes, ships, oil and gas production, and components for the chemical, pharmaceutical, cement, and food industries. Siemens bought Flender, a 19th-century belt poly manufacturer, from Babcock Burson in 2005. Flender, however, was short of Siemens's growth and profitability expectations.